It's about that time of day again, folks. Welcome back to your nightly newsletter for Wednesday, May the 4th, 2016. My name is Joseph James. Thanks for joining me once again this evening. Markets are looking quite range-bound this evening as we look at the charts. Crude and gold have larger ranges with plenty of room to trade back and forth, but the S&P and the Euro are trading in little tiny ranges tonight, so we're going to focus on fading those breakouts in tomorrow's session. But we have another incredible day of opportunities ahead of us tomorrow. But before we jump into charts and start putting that plan together for tomorrow's session, I want to remind you the only place to find the full-length version of this newsletter is here on our trading blog at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, there's a link in the description of the YouTube video that'll take you over here to our trading blog so you can watch the full-length version. While you're here, don't forget to grab your free pass. Come out and join me in the trade room as a guest, right, at your leisure this week, next week. Grab your free pass in the upper left-hand corner. In the lower left-hand corner, don't forget to register as a member of our mailing list. I'll send you an email every evening when the newsletter video goes out. Below the video tonight, you can download all the charts you see me using in tonight's video. Grab that download right below the video on our blog. And then over on the right-hand side, you can learn more about what it means to be a student here at School of Trade by joining our free trial membership. You're going to learn more with me on 1 week of my trial than you will anywhere else on the interwebs. I can pretty much guarantee you that. And if you have any questions along the way, don't forget to ask for help using our live support on the right side of the blog. Jumping in here, we got a Thursday session, busy week here so far. Hope you guys had a great week with us so far here. Tomorrow's Thursday, May the 5th. What do we have on the calendar? First of all, they're playing a little bit of musical chairs on us, I guess. Last night we had the Chinese data coming out last night. They have pushed it forward now to this evening. So 9:30 and 9:45 p.m. we are expecting to get some big news out of Australia. And of course, the real big news coming from the General Services PMI from China. Thought we had it last night, but you can see here, though, they've rescheduled that to this evening. Never a dull moment, never a dull moment. So be aware if you're in Asia, if you're in Australia, or if you're looking at early London tomorrow morning, don't forget there is major news coming out this evening starting off at 9:30 and then 9:45 out of China. Tomorrow morning we have 3:30 p.m., 4:30 p.m. That's the major news tomorrow morning in the London session if you're trading in London. If you're going to be with us tomorrow morning in the trade room, we open up at 8 o'clock Eastern time. And, of course, we got jobless claims tomorrow morning at 8:30 a.m. Eastern time. Those will be the most important news reports on the schedule. Tomorrow night we got a big news report coming out of Japan. We'll talk about that in tomorrow night's newsletter. But right now, though, most important news is going to be this evening from China, 9:30 p.m. Eastern time. And, of course, tomorrow morning, you get started off in the European session at 3:30, 4:30, and then the U.S. session, jobless claims at 8:30 a.m. Remember to trade around that news. News is noise. Don't forget the plan. And, of course, we'll teach you guys all about trading news in our beginner's course and then back it up in our intermediate course here at School of Trade. You get the calendar for tomorrow, though. Be prepared to trade around that news. Let's keep going. Crude oil is bullish with a short-term spike in channel after the sellers were unable to continue the move that started after today's inventory report. Buyers are looking for pullbacks in the correction zone for the most reliable trades in the short term. The bears had complete control over this market until the bulls took control just below the low of day. The strength we can see coming off these lows tells us to expect another leg higher, and we have a new bull channel that's looking for a retest of the high before possible rotation back down to the low. As you can see right now, we're actually testing the high of that pending bull channel. We got a couple clues here on the chart this evening for crude. First of all, we get a bear channel. There's a couple bear channels on this. You can see this larger bear channel that I've got drawn out here. That's going to be a definite target long term. It's definitely resistance overhead, so sellers will be looking to sell it. Buyers will be looking to buy up to it. Top of that channel, of course. This is one of those really wide, almost flat channels that you really could look at this as a trading range. You know, it's got a slight bear bias to it, obviously, but you really could look at this as just one big range, right? Buy the low, up to the high, sell the high, down to the low, buy the low, up to the high, sell the high, down to the low. Slight bearish bias, obviously, because we do have that lower low. But when you look at the next clue, the bull channel that we're seeing here right now, look at this spike higher you see here. What this feels like to me is that the inventory reaction, right? This is all based on inventories today. This big bear channel down was all after inventories. We rode this thing up in the trade room this morning. Inventories came out, slammed it higher, and they finished the move all the way back down. But look at how they reacted to it down at that low. Seller failure at the low, buyers completely taking this thing back. And when you see a move like this on a chart where you see just such strength from that market, right? We call that a strength setup. You're going to want to buy the close of that red candle. That is momentum at its best, and it's going to continue for a second leg higher. So first leg, small pullback, right? Second leg, and we're pretty much getting the tail end of that second leg right now. Bottom line is, up until we saw this bullish spike higher here, you had to give the benefit to the bears, right? I mean, up until that point, you're thinking this thing's going back down to those lows, but this, and you'll see on gold in a moment, gold's the same, pretty much same situation, where we clearly have a trap low and just looked at as a beautiful buying opportunity for those bulls. So in my opinion, this looks more like just one big range right now than anything else, and we're most likely going to find our way back up to the high of that range. So bear channel tells us we've got resistance waiting overhead. Bull channel tells us this is kind of a pending bull channel right now, right? This is kind of a pending bull channel right now. It's definitely got potential to be a spiking channel here, right? That spike up, channel out, second leg higher here. As that thing goes higher here, that correction zone is no longer going to be in play here right now. But again, if I had to guess right now, though, we find our way back up to that high. Hopefully not too early tomorrow morning, so we can get a chance to get in on this with it. Because right about now, you don't want to be buying any more here now. Now you were definitely way too high up around the high of that channel. Okay, next thing, of course, bulls want to see pull back into the correction zone. Bulls definitely want to see a pullback here right now, but with that new spike higher here, that correction zone is pretty much old news at this point. We're looking for that pullback into the correction zone, but as I'm recording this video right now, you can see as it just breaks higher here. So we've pretty much got now an overshoot of a pending bull channel high right now, so we're going to need to see this price come back a little bit before we want to buy this thing right now. Bottom line, bull channel here, right? Bull channel here. That's our biggest concern being a buyer right now. What do the buyers want to see? The buyers are looking for a breakout pullback, right? Hold above that bull channel. Breakout pullback, hold above that resistance. Ideally, look at this thing pushing higher here right now. So definitely look for, this is always the hardest part of recording the video, look for those buyers to break out, pull back, use that trend line as support, and then look for your target up at the high, pending channel high, and of course up at that high at 44.88. If we can't hold that pullback, if this thing collapses back down in, boy, it could be a pretty rocky ride. You've got some support down here at where the correction zone was before. Okay, there's possibility for that, but really what you're looking for is that rotation all the way back down and then try to buy that low of that bull channel. Okay, so again, pretty aggressive move here on this crew. We don't see this very often. As you can see, just such strength, right, coming off that low. One leg up, two legs up. Measure off that move, and that should give you, we should be seeing profit taking here by now. The only variable here is, again, with that second leg up, I was hoping that second leg up would come a little bit later on in the evening so we could find a way into this thing. Again, breakout pullback, right? If we can't hold that pullback, though, there'll be support back to the consolidation zone, but really the most reliable trades are going to come back at the low of that pending bull channel, and that's going to require a pretty hefty collapse right there on behalf of the bulls. What do the bears want to see? The bears want to see a double overshoot here of the bull channel high, right? The bears want to see this price go into that bull channel high, try to go higher, fail to keep going, and then come back down in, looking for a double overshoot at that bull channel high. They're also looking for buyer failure back inside this possible correction zone here, right? Buyer failure back down, and then a breakout pullback as we go lower. So as you can see here right now, extreme strength from the buyers. Buyers looking to hold a pullback here above that channel high to keep it going. If they can't hold the pullback there, beware of that double overshoot. Beware of that double overshoot for a selling opportunity for the sellers. There's a definite consolidation zone down here. This will be another spot here for buyers to want to buy there. Sellers will definitely look for that to fail. And of course, all the way back down at the low, seller failure at that channel low is going to be the most reliable trade here for the buyers. If they can't get it, the sellers will be looking for a breakout pullback using that channel low, right, as resistance on the opposite side. Very, very strong here for the bulls right now. Be careful if you're trying to sell this market. Really the only place you really can be reliable about selling this is going to be up at the highs here. You know, it's waiting for those buyers to fail at the highs and trying to sell the sucker right back down in. Beautiful example of a bull trap or a bear trap coming off those lows and just extreme strength following up with a symmetrical second leg. This is exactly what we talk about when we talk about big, strong moves. Usually have a symmetrical second leg. Now it's just a matter of, can they hold it? If they can't, we go back to that low, possibly all the way back down, but that is not very likely because you're probably going to see a lot of buyers here scaling into this move as this price pulls back, right, to eventually get back up to what is, again, what kind of thought of as a one big trading range, right, to finish that move all the way back to the upside. Never a dull moment on this nightly newsletter, that's for sure. Throwing me a bit of a curveball there with some action in the after hours. On the S&P, is trading inside a range this evening. Here's a polar opposite of what we're seeing on crude oil. We get a short-term bull bias in a trading range. Buyers are looking to use a short-term channel to finish rotation back to the highs, while the sellers are looking for a failure. The trading range tells us to buy low and sell high, focusing on failures at range expansion levels and using the pendulum swing to gauge our targets. The recent failure at the low, combined with that bull channel, tells us to look for a push outside this range with a target up at 53.50. So in the short term right now, the bulls definitely have the bit of the edge. We see this two-try rule, sellers quickly failing at those lows, going right into a beautiful bull channel. And so we're expecting to see rotation of this channel back into the high. And there's definitely a bullseye right now on that 53.5 area. That's the next range expansion. Now, real quickly, talking about some trading ranges. The most important thing you want to remember about trading ranges is, first of all, rotation, right? Low to high to low to high, buy low, sell high. Second thing is focus on failures, right? Focus on failures. We're going to give the sellers 2 tries to break out of the range. If they fail, we buy it back up. Give the buyers 2 tries to break out of the range. If they fail, sell it back down. We also know that we have the pendulum swing. The third piece of the puzzle for trading ranges is going to be the pendulum swing. Imagine there's a pendulum right in the middle, right? That's the balancing area of that range. Now imagine the sellers, they try to push this price lower, they fail, the pendulum swings all the way up to the opposite side, right? So that means the larger that the breakout failure goes, that means the larger the pendulum swing is expected to be. So 3 main components when it comes to ranges: rotation, failures, and that pendulum swing. Okay, we also take the size of that range, project out for resistance, project out for support, and that gives us opportunities here to find support levels below to buy back up, right, or sell back down in. Now that we're back in the chart now, you can see here we really only have 2 basic clues on this chart right now. We get a trading range, okay, the range from 47.75 to 41, we'll call that 42. That trading range is the balance area, and that trading range is going to be your price magnet. We're going to keep looking to buy low and sell high using failures. Very similar to what we saw right here, right? Buyers try once, buyers try twice to leave the range. When it comes back down, we're selling it back into that range. Here again, sellers try once, sellers try twice. When they fail, we're looking to send this price right back into that range. Okay, the final clue we see on this chart is definitely going to be this bull channel. Again, like I said at the beginning of this section, because we saw the sellers fail, we know to expect that pendulum swing to at least, right, swing back up in the opposite direction. But you can see here, though, with that